Hello, my friends. It's Craig Larson at Larson Financial Advisors with the Market Minute for February 19th, 2013. I thought I would address the issue right now. We're about 3% below all-time highs in the stock market, and I'm starting to read some things from some trusted analysts that say the market's looking toppish. So let's look at some of the evidence on that. Number one, the trend indicators that I follow are all overwhelmingly positive, so there's no need to rush out and sell everything. But because of some circumstantial evidence here, I think it's noteworthy to take into account and now assess your risk level and particularly ask yourself, do you have a plan to avoid big losses going forward if indeed we're getting close to a major market top? So what is the circumstantial evidence we're looking at? Number one, we're seeing near record inflows into stock funds, which usually happens near peaks. In fact, we're just shy of the all-time record of February of 2000, which you may recall was about a month before the peak in markets then, before the NASDAQ index fell nearly 80% and the S&P 500 fell almost 45%. So record inflows typically happen near market tops when everybody's feeling really, really good. Secondly, we've got super bullish sentiment or very positive sentiment on indicators there. And sentiment is a contrary indicator. You know, people usually feel very positive and they feel the most comfortable about markets after they've already gone up significantly, and they usually feel the most negative about it after they've dropped significantly. So with sentiment indicators near record highs, that's more of an indication that we're closer to a top. Thirdly, we've got very low volatility as measured by the S&P or the VIX volatility index. You know, we're not at record lows, but we're certainly at very, very low levels, which have in the past preceded big market drops. We've got high leverage in play. Hedge funds are near high levels of leverage or borrowing money to make bets, showing that they're very optimistic, very complacent right now. And we also have very high levels of insider selling with what's called C-level executives. So the CEOs, CFOs, etc., are at extremely high levels of selling. Now maybe they're doing that just to raise money to pay their taxes, but maybe they know something about business which they're not feeling too positive about. So there is some circumstantial evidence. It's a cluster of data which typically accompanies market tops, and of course not always exactly at the peak, but it's something to just be aware of. So you want to ask yourself, what's your plan to protect money if indeed there's potentially a big drop in markets coming? And as your investigator on this, I'll keep you appraised of the evidence as I see it coming up. And thanks for tuning in, and have a great week.